We are getting ready for the very big jobs number. We hope it's a very big jobs number. The December jobs report coming out at 8:30 a.m. Eastern Time. The consensus estimate, the number to beat right now, would be for the economy to add 160,000 jobs, and the unemployment rate expected to stay historically low at 3.5%. Giving us their thoughts and insights right now is Beth Akers, senior fellow at the Manhattan Institute and former economist at the CEA under President Bush. And Jim Sullivan is here, U.S. macro strategist at TD Securities. So what are you looking for? What do you think is going to happen?
I'm going to maintain optimism here, and I think that I'll let ADP number allow me to think that we're coming in somewhere closer to 200,000 jobs.
200,000?
Yes.
So you're not on the...
Going on the over.
I'm going to go over.
No, I'm not.
Right.
You're not pessimistic?
I'm just lowering expectations. Lowering expectations. I just can't believe it could be 200 again. It could?
Well, you know, I think the labor market has been consistently stronger than we've all expected throughout the year. So I'm going to maintain optimism. Why not, right?
And
That's amazing.
Where are you on the unemployment rate and where are you on wages?
I think we'll be flat on the unemployment rate and a slight tick up in wages. So continuing this very modest growth trajectory that we've been on.
I'm looking at you. I think you're going to be less optimistic. I'm worried.
I'm taking the under, certainly for this particular number. Not that I think the trend is suddenly plunging, but it's coming off the 266 last month.
Right.
Even if you X out the GM strikers coming back, it was over 220. I've got 145. I mean, even if you put in a 145, assuming the revisions, you get almost 190,000 a month in the fourth quarter. In the first 9 months of the year, we're 170 something. So the trend is still looking pretty strong. So you could get an even weaker number. You can get 100,000 or less in December. Right. Your Q4 average is still going to look pretty strong. So,
okay, but what do you think we always have to play this. There's this very strange, perverse game that happens, which is that sometimes a good number is a bad number. A bad number can be a good number because there's sort of a implied view that the Fed is going to do something or not. Mm-hmm. Right now, there's a view the Fed won't do anything. If it runs hot, is that bad? How do you sort of see the number versus the market?
Yeah, I don't think the range that we're talking about here is enough to really push the Fed in one direction or another. Even if we get a really nice 200-plus number, I don't see the Fed thinking that that's enough to change their expectations. So good is going to be good, bad is going to be bad, and the market's just going to react based on the over-under of 160.
Where are they coming from?
Well, we've got softening of the labor market indicated by the fact that we have an increase in jobless claims relative to last year. So to me, that's a better indication of the fact that we are on this moderating trend.
Where we're finding the workers. I'm talking about it. We're paying them more. They're coming out of the people that were not in the participation number. Where are they coming from? I mean, 3.5. If you take it at face value, shouldn't be anyone left. Hardly. Not that many people left. I saw an article somewhere that Taco Bell's paying $100,000 a year for certain employees. Did you see that?
No.
Got to check Drudge once in a while. Yeah. I didn't look into the article itself. I didn't look into the article itself, but it was one of the headlines. So I'm sure it's like a store manager or something like that.
That's what I would imagine, right?
Yeah. Right. I mean,
for a high-producing store,
I would take less to work at Taco Bell myself.
As long as you got complimentary food.
As long as I was able to, to eat one of them. But so you think they can come out of the people that aren't working?
Yeah, potentially. I think that's an option.
Isn't it time for things to start getting tight?
Well, I think they are relatively tight. I mean, the unemployment rate has been coming down. I mean, it hasn't come down quite as rapidly in the past year, but it's at its low at 3.5%. It was a little under 4, like high threes a year ago, and I think the employment numbers are starting to slow. And it is plausible that the numbers are overstated a little bit. We're going to get the annual revision to the payroll numbers next month with the January report in early February. And some prelim numbers that the BLS has put out suggest that there is going to be a bit of a downward revision. Right. But yes, ultimately you need payroll growth to slow to probably less than 125,000 a month to stop unemployment from falling.